Hi everyone, today we will be discussing about Booking Holdings and Expedia Inc. and their performance in the travel industry over the periods of 2016 and 2017. Before we begin, let me introduce myself and my team. My name is Rachel and my teammates are Apiksha, Rohan and Tulu. In the past 2 decades, the number of international travel departures worldwide has more than doubled from 600 million to over 1.4 billion, recording a total high of $1.6 trillion in gross bookings in 2017 alone. Analysts in the industry are expecting this figure to continue growing in the coming years as world economies continue to strengthen, leading to higher per household disposable income as well as the increase in convenience and competitive pricing provided by online travel agencies. An online travel agency is described as an agency that engages in selling and arranging accommodation, tours, transportation, and trips for travelers through an online platform. The demand for these kinds of services have increased in the past few years as consumers become more familiar with purchasing products and services online. Through these platforms, consumers are able to obtain information via customer reviews of their preferred destination and find the best deals for flight and accommodation, allowing them to make better informed decisions for their travels. Booking Holdings and Expedia Inc. are two leading players in the sector, who together make up approximately 2/3 of the global travel industry and 95% share of US online travel market. Expedia was founded in 1996 as a division of Microsoft that specializes in providing travel services to consumers primarily in North America. They entered into the UK and Europe market in 1998 and 1999. The company announced IPO in November of 1999 and reported their first profitable quarter in January 2001. IAC acquired Expedia in August 2003 and acquired TripAdvisor in 2004 and made investments in Elong Inc. in its move to expand globally. In August of 2005, Expedia spins off from IAC as Expedia Inc. with Dara Khosrowshahi as CEO. Expedia completed the acquisition of Orbitz Worldwide in September 2015, allowing them to further expand their business reach. Today, Expedia operates over 200 travel booking sites across 75 countries. Some of their notable brands are such as the Expedia.com sites, Hotwire, Travelocity, Orbitz, and HomeAway, with over 350,000 property listings on their sites. Booking Holdings was founded in 1997 by J.S. Walker under the name of Priceline.com. They popularized the name-your-own-price bidding model, which allowed consumers to bid for tickets. The business ran on the name-your-own-price model until it was pulled in 2016 as studies began showing that posted price can guarantee higher profitability to service providers than a name-your-own-price mechanism. The company announced IPO in March of 1999 and has made several key acquisitions over the years, such as Agoda.com in 2007, Kayak in 2012, and OpenTable in 2014. On February 1, 2018, the company officially changed their name to Booking Holdings to reflect its largest revenue-generating subsidiary. Today, the company is well established and recognized internationally, especially in the Asia-Pacific region through the Agoda and Booking.com brands. In total, they operate websites in about 40 languages across 220 countries and has a strong and growing portfolio of over 61 million property listings. The key drivers in the industry are firstly, technology and product innovation. Technology has definitely played an important role in driving the business for online travel companies. The use of the internet for commerce has tremendously improved convenience and efficiency of researching, planning, and booking trips through secure channels. Secondly, global expansion. Continued expansion in Europe and Asia markets is a key driver for online travel companies. By expanding operations to new countries, they are able to increase the number of accommodation providers that join the site, which translates to more room nights. The localization to local economic conditions, language, and currencies has also opened access to local consumers across the globe. Moreover, over 50% of the world's tech-savvy millennials with spending power live in Asia. Hence, growth for the industry is expected to increase further in Asia. The key challenges for the industry is that declines or disruption in the travel industry can affect the financial performance of online travel companies as spending levels tend to decline or grow more slowly during economic downturns. A decrease in travel expenditure will reduce demand for travel services. Factors that would cause this disruption includes political stability and economic standing of a country or region, continued consolidation of airline and hotel chains, reduction in fare discounts and travel-related strikes and labor unrest, and also natural disaster. Another key industry challenge is that fare aggregators and vacation home listing sites are dependent on providers of accommodation, rental cars, airline tickets, and restaurants for their listings. Maintaining a strong relationship with business partners and third-party service providers is a must to ensure continuous access to their products and services. There is also a potential of harm by activities of third-party service providers that these companies have no control over. Lastly, international operations typically are exposed to foreign currency risk. Fluctuations in exchange rates between the US dollar and currencies the company operates in can result in transaction gains and losses. The key competitors for Expedia and Booking are Ctrip in China and Make My Trip in India.
Continuing with street position and expectations for Expedia, out of 33 analysts, 22 gave the stock a buy rating, 1 gave it an overperform rating, while 10 had a whole perspective on it. Analysts have estimated a target price of $180 for Expedia, while the low price was $115, with a median of $154, which is a 47.37% increase over the current price of $104.5 as of March 3rd, 2018. With a market cap of about $16.3 billion, it has about 138.9 million common stock and 12.8 million Class B common stock outstanding as per its annual report of 2017. For Booking Holdings, out of 31 analysts, 19 gave the stock a buy rating, 2 gave it an overperform rating, while 10 had a whole perspective on it. The final verdict on the stock would be buy. Analysts have estimated a target high price of 2300 for Booking Holdings, while the low was 1600, with a median of 2050, which is a 0.80 increase over the current price of $2033.79 as of 2nd March. With a market cap of about 87.6 billion, it has about 49.1 million shares outstanding as per its annual report of 2017.
Now let's take a look at company segmentations. Expedia has 4 segments including Core OTA, which provides a range of travel and advertising services to its customers across the world through a range of brands including Expedia.com and Hotels.com and so on. And as you can see on pie chart, it owns the highest share of revenue. Trivago sends recommendations to online travel companies from its hotel meta-search websites, and Agencia, which delivers managed travel services to corporate customers, and HomeAway, that provides an online marketplace for the vacation rental industry. And for Booking Holding, these segments are agency profit, which mainly includes travel commissions and customer processing fees, and owns about 77% share of revenue. Merchant, which is gained from revenue charged to customers, and other profit, which derives from the selling of advertisement on websites. Now I will explain each company business drivers. For Expedia, these drivers consist of global expansion, which approximately 45% of worldwide revenue was through their international points of sale. About product innovation, each Expedia technology platform is operated by a dedicated technology team which drives innovations that make researching and shopping for travel much easier. And for new channel penetration, during 2017, approximately 1 in 3 Expedia Inc. transactions were booked globally on a mobile device. And for Booking Holdings, drivers are leveraging technology. They focus on providing consumers with a variety of intuitive, easy-to-use online travel and restaurant reservation and search services. Partnering with travel service providers and restaurants, for example, Booking.com's Booking Suite services are designed to offer accommodation providers with affordable marketing and business analytics tools to help them attract customers and more effectively manage their properties. Maintaining multiple brands, for example, Booking.com offers consumers flight search capabilities provided by Kayak and restaurant reservation services provided by OpenTable. Investing in profitable and sustainable growth, like their investments in Ctrip, a leading OTC operating primarily in China. For both companies, there are a lot of risk factors in common. Some of the main factors for Expedia are operating in an increasingly competitive global environment. The business could be negatively affected by changes in search engine algorithms. Business depends on the relationships with travel suppliers and travel distribution partners. Also, declines or disruption in the travel industry could adversely affect business and financial performance. Risk factors for Booking Holdings include processing, storage, use, and disclosure of personal data exposes in the business to risks of internal or external security breaches and could give rise to liabilities. System capacity constraints, system failures, or other attacks could damage the business. Use of mobile devices creates challenges and may enable device companies such as Apple to compete. Fluctuations in currency exchange rate and not being able to keep up with high rate of technological changes. These tables reflecting the compensation earned by most highly executive officers in each company. For Expedia, the total compensation earned by Barry Diller, chairman and senior executive, is about $8.5 million during 2016, which was less than what he earned in 2015 due to the decrease in annual cash bonuses paid to executive officers for performance in the relevant fiscal year. And for Booking Holdings, Mr. Boyd was named interim chief executive officer and president from April 2016, earned about $16.5 million. Now let's take a look at summary earnings call. According to 2017 earning report of Expedia, some of the significant accomplishments are 13% increase in total gross bookings, mainly by growth in brand Expedia, HomeAway, and Hotels.com. Total revenue increased 15% to $10 billion. Cost of revenue increased 10% compared to the prior year by increasing data center, cloud, and other costs. Net income attributable to Expedia was $378 million in 2017, an increase of 34% compared to net income in 2016. For full year 2017, Booking Holdings had gross travel bookings of $81.2 billion, a 19% increase compared to 2016. Revenue increased by 80% to $12.7 billion, and cost of revenues decreased by 10% to $2.5 million. Net income for full year 2017 was $2.3 billion, grew by 10% compared to 2016.
Hello, we will now move on to the horizontal analysis. The horizontal analysis is the percentage analysis of the increases and decreases in related items of each financial statement. From the horizontal analysis of the income statement at Expedia, it can be concluded that the operating revenue increased by almost $2 billion. This led to an overall increase in the gross profit for the company. Due to an increase in income taxes, the overall income reduced in 2017. From the horizontal analysis of the income statement at Booking Holdings, it can be concluded that the operating revenue increased by $2 billion due to an increase in the gross profit earned by Booking Holdings using their agency business model. This led to an overall increase in the gross profit for the company. Due to an increase in income taxes, the overall income reduced in 2017. From the horizontal analysis of the balance sheet of Expedia, it can be concluded that there was a steep increase in the funds invested for cash and equivalents as well as short-term investments. Amount of trade receivables increased in 2017, thus increasing the allowance for bad debt. Accounts payable in 2017 increased in comparison with 2016. Overall liabilities increased in 2017. From the horizontal analysis of the balance sheet of Booking Holdings, it can be concluded that there was a steep increase in the funds invested for short-term investments. Amount of trade receivables increased in 2017, thus increasing the allowance for bad debt. Capital invested in assets increased tremendously in 2017. Accounts payable in 2017 increased in comparison to 2016. Overall liabilities decreased in 2017. From the horizontal analysis of the cash flow statement at Expedia, it can be concluded that there was a steep increase in the net cash received purchasing of investments, and net cash in investing activities in 2017. Overall net income increased in 2017. There were several acquisitions done in 2017. There were more equity issuances in 2017 when compared to 2016. From the horizontal analysis of the cash flow statement at Booking Holdings, it can be concluded that there was a steep increase in the cash received from investing activities in 2017. Overall net income increased in 2017. More long-term debt payments were repaid in 2017. There was an increase in the net change in other operating assets and liabilities in 2017. There were more equity repurchases in 2017 when compared to 2016. Now we will move on to the vertical analysis. Vertical analysis is a percentage analysis used to show the relationship of each component to the total within a single financial statement. From the vertical analysis of the income statement at Expedia, it can be concluded that the cost of revenue was reduced in 2017 when compared to 2016, thus improving the gross profit. Also in 2017, there was a decrease in the expenses from income taxes, selling, general and administrative costs, depreciation costs, interest expense, and restructuring and impairment costs, which improved the overall earnings for the company. From the vertical analysis of the income statement at Booking Holdings, it can be concluded that the cost of revenue was reduced in 2017 when compared to 2016, thus improving the gross profit. Also in 2017, there was an increase in the expenses from income taxes and selling and general administrative costs, which decreased the overall earnings for the company. From the vertical analysis of the balance sheet at Expedia, it can be concluded that in 2017, more capital was invested in cash and equivalents, while less capital was invested in goodwill, net tangible assets, property, plant and equipment. The trade receivables increased in 2017, thus increasing the risk for bad debt. Overall, the current liabilities increased in 2017 while equity reduced. From the vertical analysis of the balance sheet at Booking Holdings, it can be concluded that in 2017, more capital was invested in short-term investments and other assets, while less capital was invested in goodwill and intangible assets. The trade receivables increased in 2017, thus increasing the risk for bad debt. There was an increase in the long-term debt that was incurred in 2017. Retained earnings and total equity reduced in 2017 when compared to 2016. Overall, the total current liability is reduced in 2017. Upon comparing the vital components of the income statement of Booking Holdings and Expedia in 2017, it is seen that both the cost of revenue and total operating expenses are higher in Expedia, which has a huge impact on the income of both companies. Upon comparing the main components of the balance sheet in 2017, it is seen that the trade receivables of Expedia are higher, which puts them in a higher risk of bad debt expense. The accounts payable for Expedia is higher too, thus increasing their payable turnover.
Moving on to key ratios, we'll first start with the profitability ratios, which are financial metrics that are used to assess a business's ability to generate earnings as compared to its expenses and other relevant costs. The profit margin ratio for Expedia is 3.76%, while for Booking Holdings it is 18.46%. The gross profit margin for Expedia was 82.5%, while it was 98% for Booking Holdings. The return on assets for Expedia was 2.2, while for Booking.com it was 10.34, which shows a better asset utilization. The earnings per share for Expedia was 2.42, and for Bookings it was 46.86 in 2017. As per these numbers, you can see that Booking Holdings has a better profitability as compared to Expedia. The next ratios indicate liquidity and solvency, which show a company's ability to pay its debts. The current ratio for Expedia is 0.70 and 2.58 for Booking Holdings, while the quick ratio for Expedia is 0.67 and for Booking Holdings it is 2.46. Expedia has a debt to equity ratio of 0.82, while for Booking Holdings it is 0.78 and has increased for both in 2017 as compared to its previous year. Numbers suggest that Booking Holdings has a better liquidity and solvency as compared to Expedia. The efficiency ratios typically show how a company uses its assets and liabilities internally. Receivables turnover ratio for Expedia was 6.27, which made the days receivable as 58.21, while for Booking Holdings it was 12.21, making the days receivable as 29.89, which is almost a half of Expedia's. Expedia has a slightly better asset turnover ratio of 0.59 as compared to Booking's 0.56. Both don't have any inventory, hence the inventory turnover ratio is inapplicable for them. The market ratios are used to evaluate the current price of a company's stock. The price-earnings ratio indicates the dollar amount an investor can expect to invest in a company in order to receive $1 of that company's earnings. Expedia has a better PE ratio of 49.49 as compared to Booking Holdings, which has a PE ratio of 37.08. Moving on to investors' view. The ratios that are most crucial for an investor are price to earnings ratio, earning per share ratio, profit margin, revenue growth times interest earned, and volatility of share prices. Although price to earnings ratio of Expedia is larger, as an investor it is beneficial to invest in Booking Holdings since they have a steady growth in share prices. Booking Holdings had a good earnings per share ratio, which means that the company has a good profit on a per share basis. The revenue growth and profit margin for Booking Holdings has been better than Expedia. The investment level of Expedia is lower, which benefits early investors with lower capital. Investors or corporations who have larger capitals and can wait for investment returns for longer periods can invest in Booking Holdings. On the whole, Booking Holdings is a better and safer investment for an investor. The ratios that are most crucial for a credit are debt to equity, assets turnover, quick ratio, and current ratio. Creditors are concerned about assets turnover since that gives an understanding on how efficiently the company is using their assets to generate revenue out of them. Expedia Inc. has a better asset turnover ratio. Creditors also look at the debt to equity ratio since this ratio shows how much is owed with respect to how much is owned. A lower ratio is preferred. Booking Holdings is the one which has a lower debt to equity ratio. Booking Holdings also has a very high quick ratio and is more preferred by creditors. Creditors will also be looking for a high current ratio, and Booking Holdings is the one with a high current ratio. Overall, the creditors would prefer to lend capital to Booking Holdings since the company has a lower debt to equity and better current and quick ratios, so the returns expected out of the company are better and quicker. Thus, in the conclusion, we can see that Booking Holdings has a very high net profit margin as compared to Expedia, and the reason behind this is the agency-based model for bookings, which requires less investment as compared to Expedia. Booking Holdings has a farther outreach across the globe while Expedia is Americentric. The American market is more mature and is now moving towards saturation while foreign markets have a greater scope of growth. In order to catch up with Booking Holdings, Expedia can make the Americentric business more agency model oriented instead, or can also invest more in the global market. This is our assessment of Expedia and Booking Holdings on various aspects of each of the companies. Thank you.